Thank you very much for visiting our video focused on the best dividend stocks in Africa. During this video, I'm going to explain why African stocks are likely to deliver attractive dividend yields in comparison to the rest of the world. I'll really quickly explain who we are so that you know that we're serious in Africa's investment world. Then I'll explain why we think Africa is such a great investment destination. Finally, I'll explain how you can invest into Africa to benefit from the many high dividend stocks that the continent holds. So in our opinion, Africa is perhaps the most exciting investment destination globally. We've got a long track record in Africa's investment world. Within the team at the moment, we've got team members who've run an African stock exchange, managed the largest Pan-African equity fund globally, so that's a fund that invests across multiple African stock exchanges, run stockbroking companies in Africa, managed a stock exchange listed company, and built up the AFSIC Investing in Africa conference, perhaps Africa's leading investment event. So I think that we're really well positioned to assist you on the question of the best dividend stocks in Africa. If you're watching this video on YouTube, then you'll find all the relevant links in the description below the video. If you're already on our website, then all the links will be on the page. So to save time, I'm not going to expand further on our team experience, but you'll be able to find out more by following the About Us links if you're interested. I also strongly recommend that you follow the subscribe to our mailers link in the description below so that we can send you a monthly email update on Africa's equity markets and the best dividend stocks in Africa, completely free of charge. So there are a substantial number of reasons why we believe Africa presents such an incredible investment opportunity for those with a long-term outlook. And that includes the fact that Africa is really relatively undiscovered from a global investment perspective. And that's resulted in what we think are really low valuations, both in the African debt and equity investment space. And those offer attractive entry points, especially when compared to valuations in more developed markets. So PE ratios are mid-teens and return on equity is mid to high 20s in the African equity markets. And in addition, and I think this is a really important point, Africa is experiencing a massive population boom. So currently 17% of the world's population is African, but at current rates of growth, Africa is growing by the equivalent population of France every 2 years, and the population is going to double by 2050. It's expected to double again, by the way, between 2050 and 2100 to 4.3 billion people, or as much as 40% of the world's population. So why is population important? Well, since the 1960s, Africa's GDP per head has been growing as Africa has developed and Africans have become richer. Unless that trend changes, in other words, Africans start becoming poorer, something we think is really unlikely, then the strong demographic growth is going to lead to strong GDP economic growth as a matter of fact. So, in common with many other countries around the world that experienced rapid growth in their working age population, we expect Africa similarly to benefit substantially from the baby boom that's happening at the moment. So in that context, it's worth noting that the developed world is aging really rapidly, and now even China is seeing its working population shrink on an annual basis. So remembering that Africa's economic growth is coming already off a low base, I think we're going to see that translated into GDP growth rates that are significantly higher than in the more developed parts of the world, as the continent plays economic catch-up. So in many cases, I think the continent's going to jump ahead with the use of new technology, or methods of operating, for instance, in the renewable energy space, maybe fintech, online education and technology, and so on. So Africa is going to provide access to growth to investors, and we see that in the higher earnings growth rates of many of the listed corporates. In fact, we believe that market capitalization to GDP at the moment is the lowest globally from a regional level, and as such, investors are likely to benefit from capital market growth in the coming decades. Of course, the arrival of the internet and other forms of communication such as mobile phones is increasingly going to lead to global companies offshoring their businesses in Africa to benefit from the low wage costs and increasingly well-educated workforce. That's something that we've done ourselves in our company very successfully. All the time, more people are coming into the workforce rapidly as electrification is happening fast in Africa. And that says the need for large power plants fed by, in most cases, imported coal. That's fallen away and is replaced by solar and other forms of power generation. So those are actually considerably less expensive to implement, and they don't require such an extensive power backbone. So the workforce is also being bolstered by rapid urbanization in Africa as the population is starting to move from the rural areas into the cities, where they're more likely to benefit from formal employment because the infrastructure is around them. And finally, Africa's benefited from significantly improved monetary and fiscal policy over the past 3 decades. And that's resulted in, among many other things, lower interest rates, manageable inflation levels, stable currencies, and African public debt levels that are low compared to those in the developed markets. So having discussed the broad economic conditions that look really favourable for Africa's emergence, it's our opinion Africa is following Asia's development path, and the coming decades will see a strong rise in incomes, continued reduction in poverty, and substantial economic gains for the investors who get in early. And so that bodes really well for strong dividend growth across the continent. So as a reminder, if you want to be kept updated free monthly on Africa's equity markets and dividend stocks in Africa, please do follow the links below the video and subscribe to our mailers. So now, having set the economic case for investing in Africa, let me talk some more about how to invest into Africa. You already may know that Africa is a really diverse continent, and it's got a huge geographic size. So it's equivalent to the US, Western Europe, India, China, and Japan combined in size terms. There are 19 stock exchanges on the continent that offer access to some of Africa's high growth and high dividend stocks. We believe that in general, the African stock exchanges are undervalued compared to developed stock exchanges, and that many stocks offer exceptional value, bearing in mind the likely growth that we expect Africa to experience in coming years and decades. When global appetite for investing in African debt and equity assets rises, in our opinion, it's probably going to lead to a sharp and sustained increase in share prices, as that is going to come from a relatively low base. So as such, we believe now is an excellent entry point for investors looking for dividends and capital growth. The South African and the Egyptian stock markets are diverse by sector, while the Nigerian stock market is driven by oil production and the Kenyan stock exchange by agriculture. New sectors have become evident on African stock exchanges in the last decade, such as telecommunications and consumer companies, and we fully expect that trend to continue and accelerate probably. So how to invest into African stocks? The comments that I'm going to make assume that you're looking to invest into shares and equities and bonds and other traded products in Africa. It also assumes that you're not an institutional investor. That's a professional investment management firm. If you're looking to invest into other asset classes, or if you are a professional investment firm, then please do contact us for more bespoke advice. So there are essentially 3 options for a non-institutional investor to invest into African shares and fixed income or debt products. Your first option is to invest into an Africa-focused fund. So professional fund managers search the African continent for the best shares to buy and look for really good dividend stocks. And using their knowledge of recent currency movements, up-to-date assessment of the political situation in countries across Africa, and the movement of fund flows into and out of stock exchanges on the continent, the professional fund managers will select the most appropriate investments and hopefully those with the best dividends for their fund. When you invest into a fund, you're investing into a parcel of shares that together should make up a diversified portfolio, allowing you to benefit from Africa's future growth. So we're related to an African fund management company called Adventis Limited. So your second option is the purchase of an African exchange-traded fund. So buying an exchange-traded fund, an ETF, has become a normal part of investment in the States and other developed nations. So low trading costs and simplicity of purchase are major reasons and attractions behind the surge of interest in ETFs. Unfortunately, buying an ETF in Africa, it's not necessarily the answer for making an investment into the continent. There are a number of reasons behind that, including the fact that an ETF will have to purchase shares on a multitude of different stock exchanges. And as mentioned before, there are 19 stock exchanges in Africa. Each of those has got different brokerage and underlying commission charges. You have to deal with different brokers. Regular trading in some stocks might be expensive because trading costs are quite high. Also, a passive approach to investing in Africa may result in your investments being subject to currency rate depreciation that an active manager might have been able to foresee. So option 3, direct account trading with stockbrokers on Africa's stock exchanges. You might want to consider opening a stockbroking account with a leading stockbroker in one or more of the fastest growing African economies. That can be quick and easy, and brokers should be able to provide you with up-to-date stock and dividend recommendations. It's important that you do your due diligence on the brokerage firm carefully. Are your assets separated from company assets? What is the stock exchange's policy in the event of a broker going bankrupt? Larger brokerage firms may have more trading liquidity, but also the level of service that you receive may be lower than that of more bespoke firms. ASEA, ASEA, is the official organisation for Africa's stock exchanges. You can review their website and discover which countries have got stock exchanges in Africa, and from there research which stockbroking companies you might like to use to buy or sell your investments directly. So thank you so much for listening all the way to the end of the video. As a reminder, if you'd like to get free monthly updates on the African equity markets and the best dividend stocks in Africa to buy, then please do subscribe to our mailers. It's absolutely free by following the links below. Thank you.